Hey, and welcome back to another video lesson on Skag Academy. Today we're going to continue our journey of looking at accumulation schematics and case studies. We will now be diving into accumulation schematic number 2, which looks like this. Now, this is very similar to accumulation schematic number 1. The one thing I want to point out to you in regards to this schematic is the phase C environment. We notice there's no push outside of the range here. There's no spring-like activity. So what we're going to do is we're going to actually look at a case study that is very similar to this. It's not completely similar. Again, there's going to be variables in the market, but nonetheless, we're going to take a look at a no spring environment accumulation. So let's jump over to TradingView. We're going to use the bar replay feature this time and look at a schematic. So we're going to let this play out. We have Euro USD on the 15-minute here trending to the downside pretty nicely. All right, price kind of continues up until this point here where we start to see unprecedented sell volume at the end of a push. All right, so this lets us know again that a lot of effort was put in at this price level, but again, it seems that it's been absorbed, right? There's some stopping action. Somebody has kind of stepped into the market with a lot of volume and absorbed that up. This, again, just lets us know to expect a potential phase A environment. This does not give us any clear-cut trading signals. A lot can still happen, right, as we know. But this volume does bring up some potential for like, okay, is this some sort of a selling climax? You know, are we still going to get further tests to this downside, possibly lower? Are we going to react off this level at all? Right? What is this absorption really about? So we let the market kind of play out. Right? Let the market kind of play out. Speed things along here. Right? And then we get this. Right, we get this harsh push down. There's less volume here. And we might begin to say, okay, maybe this is our selling climax ARST, right? Our automatic rally. You know, is this our ST? We actually get a little ahead of ourselves. We can see price coming back down again on some lower volume, right? But you might ask or even say to yourself, you know, maybe this is our ST, right? We still need more data to fully confirm things, but we can start putting, you know, some of our range lines on here just as future guides. And then the ST, even though it looks like this is going to push a little further, right? And again, look, pushes a little further, quite okay. Again, still on lower volume. All right, so we were wrong about this being the ST. Again, there's no trading opportunity necessarily within here, so we'll just kind of readjust our ST here, say this is our ST, see what's happening. Still no trade. We still want to see a reaction from a potential ST level. This is, you know, kind of trending below the selling climax here, which could potentially be a worry. When we take a look, we see a little bit of a change of character, right? We're starting to get back above these old highs that we thought was the ST. Right, now we're kind of expecting a phase B environment, right? We're expecting things to get choppy between this price and this price, and then we're just going to see if there's any sort of sustainable demand that comes in that can prove an accumulation, right? If there's any sort of continuation from the sellers to actually bring effort lower, right? We're not entirely sure what's just going on yet. So we'll take a look. Again, no real trade. Price moves down again into the ST on some pretty concentrated effort, but still lower than the selling climax and the first ST. You might start to begin to think, okay, so if this is all true, this might be an ST in phase B, right? And phase A has now completed, right? Because phase A is only those 3 points, so let's just drop a vertical line to signify that we're now in phase B. And what we really want to start seeing at this point is some sort of supply and demand working itself out. We want to see how price reacts again when it gets up towards the highs and how it reacts when it's down at the lows, right? Where that effort truly lies. So we're kind of going to just let this play out. Again, there's no trading inside of phase B. You could obviously take different ideas, but you wouldn't be trading based off of, you know, what we currently have marked. At this point, price does come back to the upside. Now I want to note that there is a change of character here, which is basically just a break in structure. Right, so we've broken above this high here, and we're doing so on concentrated effort, right? Sustainable effort, right? We're seeing now more demand come in from these levels than we've seen anywhere else in the range. We're breaking structure. We're starting to see these, again, price to volume divergences. But this, again, alone is not enough for us to begin entering a trade. We want to see complete exhaustion from the sellers. We want to make sure that we get the best entry that we possibly can, right? We don't get caught up in the middle of the range, right, when it's not ready to break out. Because if this is a phase B, we do still expect it to kind of play around and work out that remaining supply and demand. All right, so no real trades yet. We kind of just let price do its thing. We know phase B can be very choppy, so we're not expecting too much to happen here, right? And just like I kind of said, right, it's very choppy. Let me just move this over. All right, and we're starting to just look for anything, right? So we're starting to see, again, more upticks in buying volume, right? More upticks in buying volume, right? You may also note that we're building up a lot of liquidity under here. All right, so just say phase B liquidity. Right, we still take note of the ST phase B down here, but we're seeing a lot of buying action come in as we test the upper ranges of this bound. So you might start thinking, okay, so if this is an accumulation, all we're really looking for now is an exhaustion from the sellers, right? When are the sellers going to put in so much effort that they're just non-existent, right? Can we get some good pricing down here in this liquidity pocket, right? What does the future actually hold for us? So we let this play out. Right, we can see again, even though we have this demand, there hasn't really been anything sustainable yet. Right, no real options for entering. Again, keeps playing around at the highs. And then we start to get stuff like this, right? High effort from the sellers here to bring price lower. Now, this kind of volume, this late into phase B, you might start asking yourself, is this all the sellers had? Is this their maximum effort? Because if it is, we might not grab this liquidity. Now, we would love for it to. We would love to see this and then grab an entry below here. But there really isn't an opportunity yet. And I don't want to commit really to the buys because we don't have a sign of strength. We haven't moved past the, automatic rally at all. So we got to start looking for a reason to build a plan. Because phase B is only going to last so long. And now with this massive amounts of absorption, because again, just like in the selling climax, right? Look at the power behind this move. It's almost matching the selling climax, which is again typically what you want to see in that phase C environment, right? You want to see either high effort and no reaction from the sellers, which is absorption, or you want to see low effort and big price action candles that we know are not sustainable, right? So in this case, we're looking at possible absorption, but because of all the liquidity buildup, I would be hesitant personally on entering this trade. Now we start to get things like this, right, where we've got this absorption, and then now we're getting strong pushes to the top of the range, again, breaking out of the AR. And now you start asking yourself, okay, well, this might actually be a schematic number 2 with this absorption, this high effort. We're potentially looking at maybe this being an LPS. And if this is an LPS, let's just get rid of these question marks. Right, if this is an LPS, we got to get an entry as close to the middle of the range as we can for that breakout. All right, so we might start looking within this area, right, above this LPS to get in. Now, we do have a little bit of ordered block structure here. The thing with this, again, it's not sitting in liquidity. Right, we do have this area of interest down here, which looks like a great potential for an entry. All right, so I would probably have something like this marked up on my chart personally. Let's see if we can get that stop loss. Now, you would have to run a wider stop on this because you have, all of this liquidity. Or you can wait for some sort of reaction to the downside and then play lower time frame structure. But just for the idea now, we are, unfortunately saying, okay, this is running like a 58 pip stop. Is this range going to be worth trading if we do get an entry down here? Or can we maybe tighten this up and see if this liquidity holds? But we're going to leave it like this for now because, again, based off the information we have, that's what we can do. All right, so price continues down, continues down, continues down, continues down. Now, at this point, something happens, right? This pullback doesn't seem like it's going to break the LPS. It doesn't seem like it's going to break the LPS. We've got this little flag formation. Now we're kind of popping back up and we're kind of showing some demand. At this point, you have to start making decisions as a trader. Am I going to just let this possible accumulation run without me? Am I going to stay true to my rules and try to grab, this entry? Am I going to hop in, maybe with a reduced lot size up here and reduce our risk below the LPS? Because if this is true phase C environment, technically speaking, we should not break this, right? If this is phase C, we shouldn't trade any lower than this phase C, right? So let's just say I want to grab the next little dip that comes into this area, and I'm going to just run my stop loss below the LPS, right? Let's say you maybe came to that conclusion, all right? Something like this. And you're just going to see if you can ride out. If it returns back below the LPS, wash your hands, throw the trade away. There's something else kind of going on. But because of what we see with the price action to volume divergence here, we're gonna commit to this. All right, so we kind of let price do its thing. Price does come back down, doesn't quite tap my entry, but you get the idea of it coming down into this candle. Maybe you see that, maybe you take the trade up here, right? These are all going to be execution variables that are going to depend. We're just talking about the case study of price action to volume analysis here. Right, price never kind of comes back down. And at this point, we've now began to break out of the range. Now, granted, there's not much volume behind this, but you can see as we approach the highs, the volume starts to get higher. Right? It's not surpassing what it was in the LPS. It's not even really surpassing what it was in the main range, but as it is approaching these highs, volume is continuing. Right? So this accumulation starts to break out. If you were in this trade, you can maybe reduce risk, put your stop loss at break even, right? Whatever that may be. Now the question is, where does this accumulation end, right? Where is this, going to go? And the way we do our targets is, again, we grab our Fibonacci extension tool, and we're going to use the ST in phase B, the lowest point of the range. We're going to go to the high, and then we're going to come back to what in our case is the second LPS, which is here. And I'm going to just draw this over so we can see it. Right? Let's condense the chart a little bit. And we can see that our targets are upwards of 110.38, 110.75-ish, and then 111.30. Right, so if you were in this trade, you would be looking to book profits, take profit 1, 2, and 3. We do a 20% out, 50% out, 80% out rule on that, which we'll discuss further in the course. And then as we can see, if we just let price kind of continue, we do more tests to the downside. We hit TP1, we hit TP2, and then from there, the market works out more supply and demand metrics until eventually it I actually don't think it even hits TP3. Yeah, it just misses TP3, collapses to the downside. You'd be break even, you'd be 50% out of your position. But overall, that is what accumulation schematic number 2 is. Now, I'm going to be honest with you guys and give you guys a few tips. Accumulation schematic number 2 is a lot harder to play, because the way that we trade, we would have loved to look for the liquidity grab into some OBs. We would have loved to play this zone. All of that's valid. But you as a trader need to learn how to adapt to what you see, right? Once we see this phase C environment, we have to start assuming that this is going to break out. We have our concrete evidence right here, right? Us wanting this is just us being greedy, trying to get the best price, saying, oh, no, I don't want to risk that much. But when the time comes and you start to see these change of characters and that increasing demand, you have to at some point either say, I'm not going to play this schematic, or let me find the opportunity that's being presented to me. So that is accumulation schematic number 2. I want to show you guys this overlaid on the schematic. right? We can see this here. This, lines up more with the PS. Again, because of the volume profile, again, I would use this as the selling climax because this is the key characteristic of a selling climax. Then we have our AR, our ST in phase B. We can see that price messes around with the liquidity. Again, builds it up, never really takes it, and get that sign of strength. And then that next push down with the little microstructure is when we want to start taking those trades to ride out the trend. Again, I'm not going to lie to you guys, accumulation schematic number 2 is not, I wouldn't say confusing, but I would say complicated in the fact that if you're really waiting for that spring activity that you see in phase 1, it's going to be a lot harder to get a phase C type entry, right? Which is more or less, this price action over here. All right, so with accumulation schematic number 2, you might be taking lower pip stop losses, kind of trying to get in on smaller time frame structure in phase D before we break out. So a little bit more complicated of a schematic. Again, you don't even have to trade these schematics if you want to just rule out accumulation schematic number 2s from your execution because you don't like the way these play out. That's fine, but the key characteristics are there. They do present opportunities. And with that being said, we will see you in the next lesson, which we will go over with accumulation schematic number 3. If there's any comments, questions, concerns, anything you'd like to share, feel free to put them in the comments below. Say hello in the Discord, and I will catch you guys in the next lesson.